Good morning, Yngve.
Good morning.
Thank you very much indeed for agreeing to talk to TRB on film.
It's a pleasure.
It's a great pleasure to see you, and also to have the opportunity to talk to you about your research. So I wondered if I could start with the general sales turnover from your research for 2013, and if you could just maybe pick out some of the highlights for you that you thought were particularly outstanding.
Yeah, in 2013 we had a global sales of 60 billion US dollars, and that is 10 times as much as we had in 1985. It's a tenfold increase over 30 years at a compound annual growth rate of 8.5%, and that's not bad, Ty.
Very good, isn't it?
What industry, what company can you find with an annual growth of 8.5%? Not British Post Office, British Rail, or whatever. It's a fantastic figure, I would say, 8.5%.
Would you say that maybe was one of the reasons why so many people want to come into travel retail now?
I think so, yes. I mean, you have a return on every investment you make of 8.5%, whether you're a supplier or a retailer or have any other peripheral interest in the business. It's very good. And I mean, you see that the business is very reliant on tourism, on travel, and people will continue to travel. I mean, there's no doubt about it. And if you have a growth in international travel of around 4.5% per year, then you add a few percentages of for inflation, price increases, premiumization. You know, people are getting more professional, nicer shops. You have an increase in passenger per spend. So then you have an annual growth of around 7% in the years ahead, which is not bad, practically guaranteed. But coming back to 60 billion US dollars in 2013, geographically, we saw that Asia Pacific and Middle East both recorded double-digit growth, very nice. Obviously, times were a bit more tough in Europe and the Americas. If you look at product groups, the best performing product group was fashion and accessories, followed by fragrances and cosmetics. And among channels, of course, we have airports doing quite fine, and what we call other shops. Are you going to ask me what other shops are?
I think I know what they are.
Yeah, it's. I mean, we have a lot of new channels that we didn't have 10 years ago. I mean, if you think today, the borderlines between what is strictly duty-free and duty-paid, they're getting increasingly blurred.
Absolutely.
Today we have domestic duty-paid shops in Asia. Can you imagine? And some categories consider that as a legitimate part of duty-free, whilst other categories consider them as purely domestic sales.
Do you remember when you and I, if I dare say it, were young men many years ago? And we would find ourselves with suppliers who wouldn't supply domestic shops, would they? Right. Because they felt that they weren't strictly duty-free as we knew it then. Do you think that designation now is actually dying out?
I would think so. I mean, even after 1999, when we had the abolition of intra-EU duty-free sales, there was a lot of debate whether, for instance, the beauty people, could they continue to sell at the airports? Tax-paid, duty-paid prices, although at a sort of a discounted rate, competing with domestic stores. Of course, the domestic stores were very upset because they were not feeling that they were treated equally. So that was an issue at that time. But today, I think it has sort of smoothed out. Everybody respects that duty-free and travel retail is an entity, is a world of its own, and domestic trade is something different.
Interestingly, just on that point, how significant do you think it was when L'Oréal created a worldwide travel retail division, including everything? I mean, that was quite significant, wasn't it?
Well, I mean, still L'Oréal Consumer Goods Division are not really an integrated part, as far as I know, of the L'Oreal luxury duty-free business. Yet. So it might take some time. So I'm not sure I'm agreeing with you that it's still one entity.
Fine.
It's not. You're dealing with different people, at least.
You're not here to agree with me. You're here just to tell me what you think. That's fine. Absolutely. So looking back at 2013, were there any surprises for you, Yngve? Any in terms of ups or downs, or dynamism or lack of dynamism?
No, not really. I mean, when we have monitored the industry for about 50 years, and we can do trend analysis, for regions, for product categories, and so on. And over the long term, the trends are very, very obvious. In any one individual year, you can have a certain pop-up in the popularity of tequila, for instance, or other product categories, or any one region could be badly hit by any kind of natural disaster or something like that puts the curve a bit in a different shape than it should be if you make a long-term assumption about the growing importance of Asia Pacific, for instance. But I mean, not any really big surprises, I would say. I mean, the trends are there. Sunglasses are doing exceptionally well, capturing them. They are now the 12th most important product category, which is quite important. But otherwise, in liquor, whiskey, Scotch doing fine, American whiskey doing fine. We're still waiting for the big boom in still wine, actually.
Nice.
But it hasn't really happened yet.
Well, let's leap forward from there to what seems to be a very different scenario today in 2014, and perhaps looking forward to even the first half of next year. We are facing a lot of challenges, aren't we? I mean, it would be ridiculous for me to say to you what concern you, because I know that you're going to be concerned about some of the things that we see on the news channels all the time. But what, if you were to pick out some of those things that concern you most, what would they be?
I think it's interesting to see that in 2010 and 2011 we had double-digit growth in this industry. In 2012 we had around 9.5%. In 2013 we had 7.5%. Do you see the trend? Yes. The pace of growth is slowing down. In the first half of this year we had 6%, a further downturn. And obviously there are issues in the world that are really causing some worries. I mean, nothing unusual really, because we always have had incidents of force majeure nature with the tsunami in the Indian Ocean in December 2005. We had the tsunami in Japan in February 2011. Gulf wars and things like that. And but this year we need to see a strong recovery in South America. We don't see it yet. The slowdown in China is causing troubles to everybody. The economy is growing at a pace that you haven't seen since 1990. So the spending of the Chinese are coming down. But you also have this terrible thing of Ebola that we have seen. And now you have around 10,000 infected people around the world. The worst projections talked about 4 million people by year end. But even if 10 million people might not see much, but you have a fear factor.
Oh yeah.
It's all about consumer confidence. If consumer confidence is lowered or hurt in some way, people are saying, shall we cancel that holiday in Africa?
Or as you told me when we started just before the interview, shall I go to Cannes?
Shall I go to Cannes? Yes, even that. Yeah. Some people are very conscious of these things and don't want to risk anything. Of course, we can say that they're exaggerating the risks, but people are concerned. And Ebola has the potential to be the most disastrous sort of external event affecting not only our industry but also travel and tourism, because if countries start to stop their borders, if they're not allowing people to travel, I mean, we will have no people at the airports. That's a terrible scenario.
Absolutely.
So don't underestimate it.
No, certainly not. Anything else? I mean, are you worried about the slowdown in China, or do you believe that the market there is just changing?
The market is changing to that extent that, I don't really like to talk about China. I like to talk about the nationality of Chinese.
Okay.
They are much more interesting than China themselves.
Okay.
Chinese people, they spend 2/3 on luxury goods when they travel abroad, and instead of buying it at home. But the middle-income earners that you have today, they don't have the purchasing power like the very affluent Chinese, that went out a couple of years ago. But still, the pace of growth is good. China is growing very well. And it's interesting, if you make a forecast to look at how the world looks in 2048. We have made some projections, just playing with the numbers here. And at that time, China and the Asia Pacific might be 75% of the global business.
Amazing.
Europe might be 15%, if the trend continues. So we don't know really, but 25 years ago we couldn't imagine Europe with 60-65%, 1/3 of the global market would come down to represent only maybe 15%. That's a huge change.
Thanks to the comprehensive nature of your research, you're probably one of the few people in a position to answer this question if you wanted to. Do you feel that, given that there is this new drive of middle-income Chinese who maybe don't have that huge extra or exo kind of money that the previous visitors and travellers had, do you see some of the shops need to look at their pricing? Because we are a very luxury-orientated industry, aren't we?
Yeah.
Do you think that maybe some of those prices might be too high for those people?
Well, let's say you will always come to some sort of level where people are making a choice: shall I buy it or shall I not buy it? Prices are one thing; savings is another thing.
Okay.
Or another thing, and I think that when have the sort of continued mergers and acquisitions on the retailer side, the benefit could be that you will have a more harmonized pricing around the world on products, because these global retailers, they're all over the world, and suppliers would like to have, more than anything else, a sort of uniform pricing on the products, adapting to exchange rates, which is always also an issue to be considered. But people have money in their pocket, but they are getting more and more conscious of going to spend it on that product. And the upper level of very exclusive products, $3,000 and so on, they will always have a market. But then in the middle segment, you have to be really careful how you price your products.
It's so sensitive, isn't it?
It is. It's very sensitive. Also the comparison. This product is sold at a certain price in Asia, in Australia, a certain price in Europe. That could also be very sensitive. So harmonization of retail prices and duty-free, that is something everybody's looking for.
Now, I know you're an optimist by nature, and you've watched a long line. How many years have you now been running Generation?
35 and a half.
It's a long time to be watching the market.
Yeah.
In terms of the health of the market itself and the structure of the market, do you feel that it's in pretty good shape? Obviously external forces nobody can mitigate, and they will be there whatever happens from time to time. But do you feel it's in good shape? What's your view?
Well, basically I would say it's in a good shape. You have, what we are seeing is that retailers are adopting a more professional approach to things. When I started this 30 years ago, and I knocked on the good doors to retailers and asked them, "Are you interested in some research, Mr. Retailer?" They laughed at me, because at that time business was growing 20, 25, 30% per year. So who would be interested in research? But when you had the economic crisis in Asia in '98, the Russian crisis, the abolition, 9/11 and so on, and even now, margins are being squeezed both on the retailer side and on the supplier side. And that's why they start to look at their own organization. Are we doing the right thing? They're trying to benchmark themselves much more now than ever before. Still, there's a lot to do, for retailers. Some are much more advanced than others. Suppliers, there is a constant battle between suppliers and retailers. But don't forget, battle about the power, about the control of the business, so to say. And with this mergers that you're having now, on both the retailer side and the supplier side, don't forget that the retailers are totally dependent on the suppliers.
Oh, of course.
The suppliers are not really dependent on the retailers to the same extent because they have 97.5% of their market still there.
Yeah.
But this battle will continue, and when you're fighting for something, competition, as you know, is good for the health of the industry. So the more competition that we have also in our business, the better it is for the future.
Well, that perfectly leads into the next question, which is, are you expecting more consolidation on the retail side, which obviously would shrink the amount of competition, maybe in the top 10, top 15 operators?
Yeah.
Is that an issue, do you think?
It will happen. I know one that will happen in the next 2.5 months. I'm not going to mention it. But you can speculate. But you have some retailers at the very top that are very big. Then you have a middle level of retailers that are barely big enough to be interesting to suppliers and for winning concessions, tenders and so on. And there you will see mergers from, I would say, from rank 5 to 10. You will see mergers and acquisitions or levels of cooperation to some extent. There are many retailers today have ambitions, global ambitions. Before you had the retailers were very much in one nation when I started.
They were partisan, weren't they, in different parts of the world, in different regions.
Yeah, but today they're all over the world. Although there are very few that you can actually call true global retailers, but globalization, everything. You have it. You cannot stop it. It's like in the political arena. Why should we have an independent Scotland or an independent Catalonia? That's not really the way. Maybe it will change one day, but that is breaking up big entities into smaller ones. No, the trend is bigger. Big is beautiful. I think it's an American saying. Big is beautiful, right?
Do you believe that? After all your years of watching the market, it's not always, is it?
Well, I think for the industry, for economics, for things like that, it's fine. But personally, I like the smaller entities. Difference between people, nations, cultures, the approach, different people. Imagine if we were all the same, global and big.
Well, there is a danger of that, isn't there?
It would be, and not fun. It wouldn't be fun.
No.
We are different.
Yeah, exactly.
So we're talking, we're discussing, we are evolving as human beings. So, but from an industry point of view, it will continue certainly for many more years.
Well, last but certainly not least, you're evolving as well. Your research offer has evolved many different ways over the years. Looking at your research today, what projects are you working on at the moment that are either new or exciting, things that you'd like people to know about?
I would say that having been in the business for 35 years, we have two main sources for our data. People ask us sometimes, how do you know this data figure? What credibility does this have? How do you arrive at that and that and that? And one source are the world's retailers. There's no doubt about it. They're our very good friends. They share with us total sales, evolution data, brand rankings, SKU sales data every month. That's one source. But the other source that is becoming more and more interesting is the suppliers. They are sometimes more eager to understand the business than retailers. We are dealing with 48 product categories. Today we have very advanced research programs in beauty, confectionery, tobacco. Now this week we're also looking at sunglasses. Frederick, my colleague here, is also going to talk to the watch people, the electronics people, the luggage people, the travel accessories people, the fine writing people. Which means that when we have these research programs in place, they report to us basically what they are selling to the retailers. And retailers are, of course, selling then to the consumers. So there are two ends that you're trying to match. The retailer source, the supplier source. And by combining them, you will get a very good, accurate understanding of the importance of product categories, brands, companies, and so on. I would say right now that I would very much appreciate that the new Duty-Free World Council put some efforts behind also doing some quantitative research themselves, together with us or independently, because I think we need a body that works like ACI in the airport business. I mean, 60% of the world's airports, they report traffic data to ACI. If you had the same thing that the world's retailers, suppliers, airport owners also report to a body, let's say it's Duty-Free World Council, it would be fantastic, and that's the future. Because don't forget that we are a third party. We're a commercial enterprise. Although some people think we are a bloody charity organization, sorry.
Okay.
Yeah, so we have to be careful how we move on. I mean, we are not totally independent. We try to be objective, impartial, but of course, we have to make money. And if you don't have that urgent profit or interest, like an organization, then you might see things develop even further, and we could push it. So we are open to work with these associations, which is not uncommon on domestic markets either. But alone, we've been alone in this for 35 years. My knuckles are bleeding from all the doors I've been knocking. My knees are bleeding for all I've been standing on them. Please, mister, can you share some data with us?
I do actually understand that.
It's still a very confidential and secretive industry.
That's what I was going to ask you.
Surprisingly, after all these years, we are way behind domestic markets. Way behind. Of course, for reasons. Concessions do expire, right? So, of course, retailers have to be careful with whom they share data. But that will open up, I think, more transparency. They have to understand to give is to get.
Have you seen any good signs in that area recently, with some of the tenders and some of the bids?
No, not really.
You don't really think that's become
it's still a lot of secrecy. It's still a lot of overbidding. It's and I can understand to some extent why. I mean, especially those tenders in Asia, you have to take the highest bidder for many reasons. But one day, I think the parties, retailers, airport owners, suppliers must come down and sit down. We are not talking only about pricing and things like that. We are talking about understanding the market. The retailers must share more market intelligence with their suppliers. Now it's a cat and mouse game very much. And because if both parties understand the business better, you will see a great development.
And that, of course, is where you come in, isn't it?
Yeah.
You hope to.
To some extent, yes, to some extent.
So you're optimistic about your own company and the level of demand that there is for research at the moment?
Absolutely.
Good.
We haven't skimmed more than 5% of the potential yet.
Right.
So we have 95% untapped potential in this field.
Well, it's a good job we're both young men, isn't it?
Yeah.
You know. Thank you, Yngve.
Fortunately, we are still young, right?
We are, exactly.
Yeah.
Thank you very much indeed.
Thank you so much.
I appreciate it.
Thank you.
Thanks very much.
Thank you.